Welcome everyone, this is John Sheely at Trader Country Club. We're looking at the daily market review for commodities for February 28, 2022. Today was very important because of what happened on the weekend. Now Russia continued to push the troops into Ukraine, and it also determined that there was a little risk when he was talking about nuclear alert. And so it just made more nervous in regards to the entire markets. And as you can tell, the big move was this big move previously because of the Russia moving into Ukraine, and the stock market had gone down quite a bit. But then there was a discussion of whether or not it was going to put any more additional sanctions on it. And so the price fell down. It fell down in the crude oil, but it rallied in the stock market. Starting today, though, the market started moving back down, and so crude oil went back up because, let's face it, if the market is going to change in regards to Russia gets deeper and deeper into Ukraine, then the prices of the stock market is going to be moving down, and of course, crude oil is going to go up. But I will say this, based upon the history, you can see this is a very large range bar. It's going to be kind of difficult to get through the $100 level. I think that it's possible, but you'd have to require some kind of new news that Russia is going to be more threatening for Europe. And we're not seeing quite yet that. He may get into a certain area of Ukraine and stop. And if that does, it's going to be more difficult for prices to rally this $100 level. At times to time, we talk about the round number. Well, that's a round number, all right. $100 a barrel. And it reached that particular level and then came back. That's a big decline, too. A $10 value change in regards to crude. But I'm not so sure at this particular time. I would not buy crude oil at this time. I wouldn't necessarily sell because we still don't know exactly what Russia is going to do. But I would just stay out of the market at the moment where the current prices are. Let's just stay clear of the problem of crude oil. Same would be in regards to Brent. Right now, let's just give it some time. We've got many months to play in regards to trade the commodity market. This is too dangerous of an area of the chart because this price movement could just go into this range and then actually come down. I don't think it's going to change trend into a bear market, mind you. I just think that there's going to be more of a correction going up and down. Here I'm showing you gold futures, and these little two dots, all that means is that from the highs minus 3.25 average to range, that this is a large correction, and that we're going to follow again whether or not the prices are continue to move up. On gold, it's the same thing, is that crude oil is moving up, this is moving up. The gold is having the same difficulty as we were in the crude oil, is that it requires more news for prices to really go through the $2,000 level. So again, just like the crude, it wouldn't surprise me to have a correction over the next several days, but to me, it's not worth trading. We really don't know what Russia is going to do on the next several days, and we'll just have to stay on the sideline for now. We're looking at the 30-year bonds, and this is a pretty good sized rally here. I think what's happening because of what's happening in Russia, they keep talking about the rate change is going to occur. Well, actually, this appears to be an ABC correction. So this is a large correction from the bearish trend in the bond futures. I think in this particular, it is possible that the rally continues on and reaches this area of the moving average. As you can see, this is an area of resistance, and you're going to have resistance at the moving average. So I think prices could go up a little bit more, stop in this area, and then we'll see whether or not we're looking for a possible short at this particular time. Just like all three of the commodities, I probably do nothing yet for the next several days. I'm showing you several commodities. This is soybeans. I'm just letting you see that this is the same thing what's going on in regards to the markets of all commodities. Here looking at a big decline in gold, the big decline in crude, the big decline in the soybeans. This price movement is under 3.25 average to range decline. That's what these dots mean. In this particular case, the close is above the open here. This violation here, it's possible to actually take a watch the market over the next several days. It's possible to go short here. Now there's a large amount of risk, but that does look like to me it's possible that this is an A wave, this could be a B wave, and we have one more decline. So we'll watch that for a possible trade depending on what's going on in the markets as a whole. I'm showing you copper futures. What's interesting about this market has been flat now for weeks. So you would think that there would be a bullish move based upon the inflation on copper, but it's not. For whatever reason, it is staying flat. So we were into a bullish trend, and our courses will be discussing it. Yes, this was a potential buy from time to time, but now that the market is so flat, I don't care if it has a bull bias or not. It's too flat. Let's not trade that. But it's very interesting to know that here you're the copper is not able to create a strong bull market. I'm going to last by looking at this chart of cocoa. Using the information that we have in the master's course, we turned into a bull market in January. We had a vertical decline, and it looked like a potential bearish trend. But based upon our information in the course, we know that we have a single close underneath the moving average. That by itself is not enough information to tell us it's now a bearish trend. And instead, we have a close back above the moving average. And it's possible to enter a long position based upon that information. We have a sloping moving average, not particularly the best at the moment, but it is sloping up. Went underneath the moving average, back above the moving average. We know our research says the odds are that the market has a tendency to go back up into the previous trend. You could easily buy there, put a stop loss under here. Now, you would not have known that the market had gone straight up vertical. But I'm just telling you is that is a possible buy based upon the contents that we have in our master's course. So I'll finish by looking at crude oil. Right now, a lot of commodities we should stay on the sidelines. That it is a news-driven market. What Russia does, what doesn't do, what Europe does, what the U.S. does, we really don't know. And we talk about trading. I'm going to want to be trading a year from now. I don't want to lose a lot of money just because I'm trying to guess what in the world Russia is going to do for the next several days. So I'm going to stay on the sidelines in regards to most of the commodity positions. This is John Sheely at Trader Country Club.